Good morning, ladies and gentlemen, everybody, boys and girls. Welcome back to your pre-market watch list. We have quite a lot to cover this morning. We'll talk about AMC, EXPR, OC something, ASTS. So pretty much the popular penny stocks this morning, and of course, whatever we get to along the way. So we'll wait a few minutes here, wait for our stream to populate a little bit. That's fine. Good morning, Joe Dykes, Milky Fade, Johnny Diego. Good morning, guys. So I guess we'll start here with AMC. So if you guys remember from yesterday, the best way I could explain it was yesterday, this red line, well, let me rephrase that. From the day before yesterday going into yesterday morning, this red line was support and the resistance that had to break when the price was under it pre-market yesterday. When the market opened, this red line adjusted and the price target then became this dotted line. So in the morning pre-market, this was a support resistance that needed to break, so we broke it. And then when the market opened, this price really adjusted, so this is no longer, and then the price level was here on this dotted line. So then you can see we broke it, shot up, came back down under it, kind of held below that dotted line, and then we went into a bearish day. So when market opened, the market needed to break above the dotted line and then stay above the dotted line to keep pressing on the bullish day. And that's what would have led us to that 62 target. Yesterday we mentioned 62 being the target. All good and dandy. That can only happen if we had the successful break and hold of the half deviation mark, which we didn't. We had the break, then we fell back under, and we held resistance. So today, the way it goes is this. I'll show you. When we go to the 4-hour chart, you'll see exactly why the market, right? If you're looking at AMC and you're wondering, well, what made it stop here and why didn't it go down much more pre-market and what really caused AMC to stop around the prices of, say, 56.40 yesterday? When we go to the 4-hour chart, you will see that we came back down to two things, 9-day moving average and the 4-hour half deviation price. So if I zoom in, you will see there's this dotted line right there. Bottom of the candles, bottom of the candles, bottom of the candles. So we're currently holding support over the 4-hour deviation, okay? Basically what this means is when market opens, this deviation will change and we might end up being below it. So if in the event market opens and this deviation updates to being above the current price of the market, that means that we're going to be still on the bear side, as in we have to get up and over and holding above. And if we just hit it and then sell down, we're in resistance. So again, I don't know exactly how the market's going to update at open. I'll just have to wait and see. But currently we're coming off of support from yesterday. And depending on how the market updates at open, we might actually be running into resistance, so to speak. And that's exactly what I was trying to explain yesterday. Is yesterday the level was here, market opens, the level's now here. So if it's the same thing, again, level was here yesterday, market opens, it might be up here. So then we're running up to test the resistance. And if we don't break, again, more bearish moves. Now, that's a lot of like what ifs here and there. And the reason it's kind of complicated is because we're in consolidation. So I'm basically giving you levels each and every day that are going to cause the market to shift down, shift back up, shift down, shift back up, shift down, shift back up, right? We haven't yet broken levels that should lead to the big squeeze, so to speak. So we're basically still in consolidation, to put it simply. Bigger now. This is a good way of saying it. Bigger bearish moves happen when we break through 52.68, and bigger long moves happen when we break through 66.58. So if you're concerned about when a big move's going to happen, whether on the bear side or whether on the bull side, you already know the 2 price points that it's going to happen at. So until the market actually gets to there and causes people to be concerned about going through one of those levels, you're not going to really see the big move, and you'll keep doing this back and forth consolidation. So big drop happens below 51.52. Big breakout happens above 66.54. So until those prices cross, probably going to be a sideways chop market. I thought yesterday was going to be the day that might have took us, but didn't work. Alrighty, now we're going to pop on over to EXPR really quickly. Just want to touch on this one. So back when we first started talking about EXPR, it was priced down here at 6. Then we pretty much gave it targets up to like 7s and then 8s. Then we made a YouTube video suggesting this could be the next AMC. Not literally in the sense that it's going to trade exactly like AMC or be as popular. But it still has a very popular formation, recognizable bullish formation that it's been trading up into. And it's the same sort of formation we saw on AMC. So the same formation we saw on AMC that led to a big move on AMC is the same sort of formation, slightly different, that we're seeing here on EXPR. So optimistic that we could still see the stock moving long. The long move that we just saw was already a great move, right? If you were long, you should have been selling in this top to begin with. Now it's a matter of, can we hold the pullback support and continue moving in the immediate? So over the past couple days, we've been following EXPR. It was Monday afternoon, I took a swing trade long onto EXPR. So right after I made that video saying this could be the next AMC, ended up taking 2,000 shares long here in this dip, waiting till the next day pre-market. Ended up closing it because we opened on a gap down. Ideally, what we were looking for on Monday morning going into Tuesday morning was a gap up over this red line. That didn't happen. We gapped down, which means instead of gapping up over resistance, we gapped down and we're staying below resistance. So, hence bearish. You'll see that we pushed back up to this red line at about market open, then the market sold down. So we closed the trade pre-market on EXPR here, and then we ended up trading bearish on EXPR down to our next support target, which was these 2 red lines. Then when we got to these red lines, we ended up buying long for a scalp trade, and then we bought long for an overnight swing trade. Well, EXPR bounced off our support intraday all the way back up on the day, closed part of that swing trade, held some overnight, but basically all I'm saying was for EXPR to move to the bull side in the immediate, it was not supposed to break down 7. If it broke down the 7 price, then we were supposed to go down to here to about 620. Once we got to 620, we then rebought the market trying to support EXPR on its true trend support on the pullback. So for the time being, as long as EXPR is above this 620 to 618 price, then we're still okay and we're still in the dip buy support. Once we start to break these levels, that's where we should be more concerned about EXPR remaining bullish. So for the time being, we're still on the long side. Even though we're going through bearish moves, we've reached pullback support levels, and we're hoping that EXPR sustains here. Once we get back over 7, then we can see the squeeze kind of happening. So let me show you how you go and get that support. Again, you go to the 4-hour chart. We zoom in. Look what's at the 4-hour chart. That long-term trending half deviation support. Perfect. Then look what happens when we switch it to the daily chart time frame. Okay, we go to the daily chart time frame. You're going to see this yellow solid line. So that's how we got those 2 red lines, was just overlapping those 2 trend lines. That's how we find the pullback support. And that's pretty much why we bought the dip yesterday. And that's why we're going to be following this long bias until we actually break down that price level. Thumbs up. Okay, on to the next one, which will be, we already bought EXPR yesterday in the 618s. Support and resistance always work best when they get there for the first time. So don't listen to the books you read or the YouTube videos that you watch when they tell you that the more times a stock touches a resistance level or a support level, the stronger it is. That is not entirely accurate and or correct. Different situations it can be, in different situations it isn't. So don't take that with 100% certainty. But what you can take with like 90% certainty is that the first attempt at a support is always the strongest. So with 90% certainty, the first test of support or resistance is always the strongest. And then each attempt thereafter actually becomes weaker. So it's kind of backwards in a lot of the books you might read. And that's probably just because it's all situational based in the market. So depending on, what sort of situation they're thinking of in their head while writing up, hey, the more times it touches support, yes. But generally speaking, you're going to have the best bounce when you get the first attempt to support. But that's just it. Most people in the market, even myself at times, have a really tough time identifying where the actual support and the actual resistance is at until it happens. That's the problem. So when I say the first attempt of resistance and the first attempt of support is always the best, right? That's because, well, let me rephrase that. It is the best. All right, and the reason that most people have trouble finding it is because they don't recognize a support or a resistance till a bottom's been made, and then they can easily visually go back and look at a chart at something that's already happened, right? During yesterday's trading on EXPR, when it started falling here, we said the price target on the downside was 620. So when it was all the way up here, we're like, that's the buy point. So we already know the buy point well before we're there. So we don't need a bottom to be put in order to find the support. We already know where it's supposed to be. So as long as we just get active in that buying zone, then we're generally going to put ourselves in one of the best opportunities of a profitable bounce trade, so to speak. Okay. Alrighty. What happened to the scanner streams? The scanner streams are online every single day. They're just on a different channel. All right, and that channel is right here. So for the 200 of you guys can use free trade ideas and Benzinga scanners every single day if you just go to that channel, and they're going to be live every single day. All right, now we're going to run into some of the popular penny stocks this morning, one of which there was a couple of them. Hold on, guys. I got to close a trade on this stock. Damn it. Wait. I'm still green on that. But I should have closed it down there, you jabroni. What an idiot. All right, so close that. Okay. So, yes, we will talk about that. We're at 8:44. Let me just, I got to fly here. I got to fly, ladies and gentlemen. I got to keep this going quickly. So, all right, we're here with ASTS, so why not? So ASTS, big stock, booming up today, blah, 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 blah. Anyways, the only trade I ended up doing with ASTS today was a short trade starting at about 1360s, shorting into 1380s, covering this drop, and then I missed the exit point, which was this 2 red line zone. I meant to exit fully in there, but I forgot, and I had to take off my last little trade right here. That's what I was doing with you guys. I'm like, I got to close this. So I was actually closing a short that I meant to close here, but forgot. So anyways, ASTS, this stock blew up. This stock is awesome, but I don't expect we're going to get too much more long bias movement out of the stock, and I would not be surprised if later today we see the stock retracing all the way back down to prices of $12.47. I know that's pretty fast, but nonetheless, we're not really bullish on ASTS now because it's already broken out pre-market to somewhat overbought levels, but not really. It's really just kind of retesting previous price action resistance and long-term standard deviation resistance. So we don't really think you're going to be bullish this top anymore. Probably going to be bearish, expecting the prices to come down towards like 1240. Okay, awesome. Over to the next one. The next one is OCUP. So this was a penny stock pre-market, blows up, blah, blah, blah. Long story short, added long to this stock here this morning, traded up to like somewhere in here, then added short on this red candle, covered most of it into this drop, and then we shorted it again here, not here, shorted again here, traded it down to here. So did a couple trades long, a couple trades short. Had no idea that the momentum was going to be this good on the way down, or else I would have stuck on it much longer. But anyways, that was the one we traded. This one was a little tricky. I'm not going to go over the full analysis on this one because it's probably just going to be a turd bag today. This probably isn't going to give you much more long side. It's going to be a pain in the ass. So OCUP are probably not going to want to trade today. Okay. That is, let's see. Yep, custom deviation scanner is still on the website. MRIN, another short squeeze yesterday. I shorted here, got squeezed, so I helped this move go up. God damn it, figures. But anyways, MRIN blows up again yesterday. You know, I remember telling you guys this thing was overbought when it was back here. And I was right. It was overbought then. It's been overbought here. It's overbought here. And it's still overbought here. So again, this is a prime example of even when a stock is overbought, it can still keep going. And you have to recognize when that's going to be the case so that if you're shorting, you're not holding too long. And if you're longing, you know when to kind of stay on. So I was the one who traded this thing completely short bias on most of these big days and failed. So I was on the bear side, and I was on the opposing team to the bullish traders. The bullish traders this go around on the stock MRIN beat the short sellers, hence why such the big squeeze. So still bearish the stock. Since we've been over this like 570 and over this 7 price, we're still bearish the stock. And those are the price targets back down. So unless you have an average ownership price right now on MRIN that's below $5, you're still very susceptible to a loss. Pretty much if you have ownership at 11, you have ownership at 12, 9, 8, you're still pretty much guaranteed a loss when the stock actually corrects, because when the stock actually does its correction, the price target on the way down will be this purple and blue line, which is all the way down here. So its corrective crash is projected down to like 7 to 690 or whatever. Okay? Awesome. Whew. Alrighty. Now we will talk about, yeah, we can touch on XELA, sure, but there was another one. What was it? Was it Tesla? Killer hand movements. Allison, this isn't the boiler room I was looking for. I don't know any other channel on the internet for stocks that's the boiler room. Unless you're looking for like the techno, like underground boiler room scene channel, then yeah, there is that one too. What happened to the boiler room scanner streams? Again, those are on another channel, which I posted that link for. Gotcha. Updates on SUNW. Yes, we have updates on SUNW, and it's pretty much just bullish. Again, if you remember the video from yesterday, pre-market watch list, we pretty much told you that SUNW was going to sell down off that red line. So the analysis on SUNW so far is pretty much working to a T. Everything we mentioned yesterday happened as it kind of should have. So there's nothing about yesterday's pullback that really concerns me. It was supposed to pull back. So yeah, we're still just bullish SUNW, price targets of $14 to $15 for the time being. Right now, the only way we get to 14.15 is by getting through the half deviation resistance. This dotted line you see we stopped at here, dipped, pulled back up to here. So the pullback might last longer than this day, might go 2 days, 3 days, I have no idea. But it's all about getting through the half deviation price here. Once we successfully do that, momentum should shift a little bit, and then we'll get closer to the 14s, 15s. But really same analysis there still applies on SUNW. Now over to Tesla. All right, so we're still bullish on Tesla. I'm actually have a small long position on Tesla. Been kind of adding into dips over the past couple days on this. But anyways, you know, the analysis for Tesla was we were going to have resistance starting at 700, and so pretty much the resistance zone was from 700 to 726. Now the resistance zone is from 700 to 720. So we've shaved off $6 of our long target and our resistance target. So our resistance target was 720 to 726, or now it's only 720 to say, or 700 to 720, 719.82. So we've lost $6 off the long move. So again, still looking for Tesla to push up, get through 700, hit about 720, then we're going to see this roll down. So we're long bias until 700 for the time being, or until we come down and actually break through support. Support in the market right now on Tesla is 657. So we still have a potential dip that could take us to 657, get bought, then run to 720. I don't think that's going to happen given the bullish move here. So I think we'll go to 720 before we would pull back down to support and then go to 720. So either way, we're bullish 720. That's where we're going to be bearish. How much you have to pay your broker to short ASTS? We didn't have to pay anything. The shorts were free on ASTS. And so I'll show you why we shorted on ASTS. So if you look at this time frame, right, you see the top of this wick on ASTS. You see this red line. If you look at that red line, you'd be like, well, I mean, like what is it? Is it because of this previous candle back here? That's the resistance? No, playa. No. Just switch it to the daily chart time frame. All right, switch it. Ready? Well, you can't see it because you just can't. Hold on. Because it's a daily chart, the day hasn't started. The day starts at market open, so you can't actually see the daily candle. But ready, watch this. See that yellow line? Okay. So let's go back to this 4-hour chart. So we go back to the 4-hour chart. There's no red line there, right? You don't see a red line. Go back to the daily chart. What we're looking for is we want to overlap our own price level on this daily chart level. So we go here, 1382. Let's put a level. Okay, so we put the level right there. Switch it back to the 4-hour chart so that we're able to see the trading activity of today, which is pre-market. And look where the top of that candle's at. Drop the mic. So this morning, when the stock was going up, I had mentioned to a lot of our traders, said this is a level we're going to short at. We want to short into 1382 because 1382 is long-term resistance. That's it. Alrighty, on to the next one. Marshall Rodriguez, no, that's not the case. It's not easier to find a stock going down than it is a stock going up. And the reason you feel that is because once you find a stock going up, everybody already knows about it. So then it's more or less just you having to pick the resistance point. Whereas when a stock is down, you need to wait for it to break out. So you're in a waiting period. So it's you waiting. When something's already broken out, it's just you've already seen it, and now it's really about you identifying where the top's at. So it is easier to identify tops and stocks that are going to sell down because the move's already happened. Whereas a bullish move, you're having to predict it before it happens. So, but at the end of the day, I mean, these have been, over like the past couple weeks, these are all of our long recommendations. I mean, PLTR was a long recommendation up to these red lines. You know, that worked. Sorry, BNGO, our long recommendation was down here. That worked. Heck, Tesla's working. So you just have to find stocks that have been oversold and into value dip buys, and that's where people are going to buy them. And that's what's going to push stocks up before they break out. But you're not wrong. It is a little easier to identify stocks after they've already gone up for sure. Mr. Mario, thank you, sir. I appreciate you. Best time frames for finding support and resistance for me, it's the 180-day 4-hour chart and the 1-year day chart. Yes, the yellow line is standard deviation. What are the red lines called? Those are just regular support and resistance lines that I put on the chart. Brother man, can you do Wish? Yes, I'll look at Wish. So, can anybody just for my own sanity, so I know that I'm not crazy and I know I'm not speaking to myself, can anybody tell me in this chat what we had recommended the resistance point on Wish would be, and you could only see more long bias movement if you went over it? So what was our projected resistance point on Wish? Yep, pretty much. Absolutely, Mr. Woolsey. 15. That yellow box and these two red lines, that was a projected resistance that we mentioned pretty much the past week and a half, right? So as everybody sees this long move up, this dip, and this bullish push up, they're thinking like, okay, we have a cup and handle. We just got to get through this resistance top. I mean, that's true, But if you think about it, right, market topped, dropped, bounced, broke out here. That's a breakout of this consolidation up to resistance, sell down. And that's because stocks like to follow trends. So by it going up to this yellow line and then selling down, it's just the stock following the trend. So basically wish you're not really too long biased unless it's a pullback that comes to a dip support or it's a move up that breaks resistance for right now. I normally am trading around 7 a.m. I usually get up, anywhere from 6:30 to 7, and so about 7-ish. Monster going back to 735, 950. MSTR. Come on. MSTR. Yes, Monster is going back to, you said, 735 to 790? So right now, my price target for Monster would be 741 to 750. Hit resistance, break through successfully, then it would be a 950 target. So your 950 target is only doable. It's only imaginable, thinkable, possible, going to happen when, if stock breaks regression level, which is 737 to 750. The market, all stocks, cryptocurrency, commodities, futures, everything in the market that I've come to find loves to follow a standard deviation format. Okay? So basically the market moves in equal chunks. Okay, so from the yellow line, this yellow line to this white line is the same distance from this white line to this yellow line. The distance from the yellow to the white is the same distance from the yellow to the green. So when the market successfully breaks the white, it's going to go for a move from the white to the yellow because that would be called a one deviation move. Don't ask me why, but it just happens. So pretty much you'd be looking for a 950 target after Monster breaks through this level. So if you were getting long here on Monster, your target would be that white line. Once you get to the white line, everybody buying down here will sell, causing a little resistance. Okay. I've been trading full-time for the last, it's probably more accurate if I just say 5 years. I've been dabbling in the market for what am I, 27, so 9. But really accurately would be 6. You could call it part-time for 2 years prior to that. And when I say part-time, I'm just studying, doing small investments here and there. But pretty much the past 5 years. There's times where, and believe me, there's times where you look at the market and you're like, I don't even want to do anything today. I don't want to trade. I don't even want to try to look at a stock. I don't even want to contemplate what the market's going to try to do, because once you do it for so long, you're just like, nah, it's just another random day. Could just watch Netflix, not even worry about trying to make money. Don't have to lose any money, So, there will become a time if you do this long enough that you don't really have the excitement, the giddiness to just go out there head first in the market, because you see it every single day. So it's oh, another stock went up by $25 a share. Oh, I'm so mad that I missed it. It's nah. I've seen stocks go from 5 to 175 in a day. So it's going to happen. It'll be there. It'll happen over and over and over again. How many rentals do you have now? I have 2 homes. I have a homestead, which I'm currently in, and then I have a rental property, which is located just outside of the college campus of the University of Michigan, which has 4 doors. So, if you want to call it one rental home with 4 units, or if you want to say 4 doors, so theoretically I have 4 units in one home. So really I own 1 property, 4 units. Actually, I own 2 properties, but one of them's rented out with 4 units. This one will become a rental probably in a couple years, depending on how I pay it off. So really only 1, but 4 units. And cash flow, and then cash flow, but revenue, it generates $48,000 a year. So, while I'm sitting here, I have a house, 40 minutes, 35 minutes away that's making me almost $50,000 a year, 11 of which goes to taxes, and then I think close to 20 of which, maybe a little more than that, goes to principal, interest, the mortgage payment, and then at the end of the year, which I don't know for sure because I haven't gotten that far, but and there's other expenses, but at the end of the year I should come out $9,000 to maybe $12,000 cash flow. So that's what I take home in pocket. So it's like I just picked up a $12,000 salary job a year, theoretically. Like, that's what I take home. Is it enough to live on? No, but if I took that $12,000 and then just invested into the stock market every single year, then that's going to grow to $1 million one day. Or if I take the $12,000 and then put it down on the mortgage every single month, or if I take down the $12,000 a year and then pay it down on the house, then I pay the house off in 8 years, and then I'm making $48,000 a year in revenue minus taxes, which is 11. Then I'm bringing home just over $30,000 positive cash flow from that property in 8 years. Then I could take that $30,000 after 8 years, invest it to the stock market every single year, and now I have $30,000 of investment going to the stock market. Or I could pocket it, or I could use that to buy another investment property. So there's a lot of what ifs and how you choose to manage it, but that's kind of currently where I'm at. Okay. With that being said, ladies and gentlemen, I gotta go. I appreciate you guys tuning in. There is more videos to come. Just an FYI, I'm not going to be on tomorrow. I will not be on Friday. Monday morning, the stock market's closed. I got a golf trip I'm going on, so I'm leaving tomorrow, and I'll be gone Thursday, Friday, Saturday, Sunday. I won't be back Sunday. Or I won't be back until Sunday, but we won't even be streaming Monday because market's closed. So for those of you that watch the scanners too, haven't figured out how I'm going to keep those online, but I might just have someone stop over and run the system for me while I'm gone. But anyways, I will catch you guys all back. I'll catch everybody back here in Tuesday morning. Sounds good. Have a good one. Cheers, guys.